Well, I'm Jaginder Rana. The topic of the day is protection of policyholders' interest. Protection of policyholders' interest. The Insurance Regulatory and Development Authority of India has issued a master circular aimed at enhancing the rights and protections for health and life insurance policyholders. So, released in September 5th, circular has regulations on claim settlements, customers' information sheet, and overall treatment of policyholders by insurers. So, customized benefit illustrations, key points from the circular that you must know as a policyholder. There has to be customized illustration. Insurers must provide a tailored benefit illustration at the point of sale, detailing specific benefits based on customer's profile, age, premium, amount, etc. This will ensure that policyholders understand their coverage options early. Secondly, streamlined proposals processing. The insurers are required to process proposal forms efficiently, aiming for a decision within 7 days of receiving all necessary information. This includes communicating acceptance or rejection promptly along with reasons for any non-acceptance. An electronic policy issuance. Upon acceptance of a proposal and receipt of premium, policies will be issued electronically with the option for physical documents if requested, and a customer information sheet is a statement provided by the insurers along with the policy document that provides in simple words important information and basic features of the policy issued at one place. The CIS must be provided in the format specified in the Schedule D of the Insurance Act for life insurance policies. Key information in CIS: type of insurance specifies whether the policy is term, life, whole life, or other insurance type. Sum assured indicates the amount payable to the beneficiary in the event of a claim. Benefits provide a comprehensive description of the coverage and the advantages offered by the policy. Exclusions list the conditions or scenarios that are not covered by the policy. Then important details include information on the free look period, renewal dates, options for policy revival and loans, and other pertinent details. Claim procedure outlines the step required to file a claim. Policy servicing offers detail on customer support and assistance services. Then grievance redressal describes the process for filing complaints and provides contact information for the insurance ombudsman. So CIS and proposal form must be made available in regional languages upon request to support inclusivity. As far as free look period is concerned, policyholders will have a 30 days free look period to review their policy terms. If unsatisfied, they can return the policy for a refund, ensuring they have the opportunity to reconsider their purchase without penalties. Improved grievance redressal mechanism. Insurers are mandated to establish effective grievance redressal system, ensuring that policyholders can easily resolve issues and receive support when needed. Mandatory nomination and updates. The proposal form will require details of nominees, ensuring that claim can be processed smoothly in the event of a policyholder's death. Policyholders are also encouraged to keep the information updated to facilitate efficient service. Cashless claim settlement within 3 hours. In order to provide cashless claim settlement for health insurance from the date of commencement of cover, the insurer shall obtain the details of members of the group from the master policyholder at the earliest. No claim shall be denied for non-availability of details of members of the group. So the multiple health insurance policies, if you hold multiple health insurance policies from various insurers, the process for settling claim has become more flexible. You can now choose to file a claim under any of your policies, designating the chosen insurer as the primary one. If the coverage from the primary insurer is insufficient to cover the full claim amount, this insurer will coordinate with the other insurers to settle the remaining balance. Insurers are required to offer a search tool on their website that allows users to verify authorized sales channels. No premium or proposal deposit is required to be paid to the life or health insurer along with the proposal form, except in case of policies where risk cover commences immediately on receipt of premium. So insurers are required to make available products or add-ons and riders to provide wider choice to the policyholders or prospects catering to all ages, all type of existing medicine and medical conditions, pre-existing diseases and chronic conditions, all systems of medicines and treatments including allopathy, Ayush and other systems of medicines, every situation of treatment including domiciliary hospitalization, outpatient treatment, daycare and home care treatment, all regions, all occupational categories, persons with disabilities and any other categories. So all types of hospitals and healthcare providers to suit the affordability of the policyholders or prospects. Policyholders shall not be denied coverage in case of emergency situations. So non-compliance with insurance regulations in India can result in various penalties and consequences depending on the nature and severity of the violation. The regulatory framework for insurance in India is primarily governed by the Insurance Regulatory and Development Authority of India. Here are some common penalties and consequences for non-compliance with insurance regulations. Fines and penalties are there. Insurance companies, insurance intermediaries and other entities involved in the insurance industry can be subject to fines and penalties for violating regulatory requirements. These fines can vary in amount and are imposed based on the specific violations and its impact. IRDA has the authority to suspend or cancel the license of an insurance company or insurance intermediary found to be in serious violation of insurance regulations. This can result in the entity being prohibited from conducting insurance business in India. So in case where non-compliance with regulations leads to harm or financial loss to policyholders, the insurance company may be required to compensate affected policyholders as per the terms of their policies and regulatory directives. Non-compliant entities may be subjected to enhanced regulatory scrutiny, including increased reporting requirements, audits and inspections. The regulatory authority may publicly censor or name non-compliant entities, which can harm their reputation and credibility in the market. In cases of severe non-compliance or fraudulent activities, legal actions can be initiated against individuals and entities, potentially leading to criminal charges and prosecution. Market impact: non-compliance can negatively affect an insurance company's market standing, leading to a loss of business and investors' confidence. So impact on policyholders: no compliance can harm policyholders by leading to claim disputes, delay in claim settlement or lack of coverage when needed. Entities that do not comply with the regulatory requirements may lose approvals for new product launches, mergers, acquisitions, or other business activities that require a regulatory clearance. So it is essential for insurance companies or insurance intermediaries and individuals involved in the insurance industry to be fully aware of and adhere to the relevant insurance regulations to avoid the above penalties and consequences. Compliance not only ensures the protection of policyholders but also helps maintain the integrity and stability of the insurance industry in India. The specific penalties and consequences can vary based on the nature and severity of the violations, and changes in regulations or enforcement practices may occur over time. So it is advisable to consult legal counsel or regulatory authorities for the most up-to-date information on insurance regulations and compliance requirements in India. So the recent guidelines introduced by IRDA brings several key highlights aimed at enhancing transparency and protecting the interest of policyholders in the insurance sector. Such as per Rule 6, it is the obligation of the insurers to ensure that both the policyholders and potential policyholders have fair and inclusive access to insurance products and services, whether through direct channels or distribution networks. As per Rule 9, every insurer shall develop and maintain a prospectus which shall contain the information of every retail insurance product, including the features, benefits, risk, grievance, redressals, and mechanism, etc. As per Rule 3, insurance policies that meet defined criteria will be issued electronically, promoting efficiency and accessibility for policyholders. As per Rule 18, to ensure thorough coverage, every life insurance policy must include a nomination. The insurer shall provide a facility to the policyholder for changing their nominees. Additionally, the insurer, while issuing the general and health insurance, shall obtain the nomination at times of issuance of new policies and at the time of renewal of policy. Free look period, as per Rule 20, every policyholder will now have a free look period of 30 days starting from the date of receipt of policy document, regardless of how they are acquired. Or the policyholders reserves the right to cancel the policy during the free look period, and the insurers shall refund the premium within 7 days from the date of receipt of this request. As per Rule 22, every insurer or the distribution channel shall ensure that they provide necessary support and guidance for registering claim, necessary specific documents which are required to support the claim, procedure to be followed for settlement of claims. Then as per Rule 25, every insurer shall establish a system and a procedure for receiving, registering and disposing of grievance and shall publish such procedures on their concerned website. Additionally, the insurer shall also publish the availability of option to the complainant for taking up grievance with insurance ombudsman if their grievances are not resolved to their satisfaction. So as per Rule 27, insurers are no longer required to submit the advertisement to the authority, thereby reducing their administrative burden. However, the insurer should ensure that the information provided in the advertisement is fair and true, and shall also reflect the potential risks with the products so offered. So it shall also reflect the registered name of the insurer along with its trade name, monogram, etc. No advertisement shall make any claims whereby it impacts the potential customer's ability to recognize and understand the advantages of insurance products, makes promises that are beyond what the policy can reasonably deliver, fails to disclose important conditions of the policy, contains any false fabricated facts, figures and features. The opening places of business within India as per Rule 30, insurers that meet the criteria are permitted to open the business within India without obtaining the prior approval of the authority. The regulations have provided different criteria for the insurers who have completed 5 years of operations and the insurers that have not completed 5 years of operations. So these are the rules framed for the protection of policyholders, and the policyholders can get the benefit of them. The IRDA protection of policyholders, interest, operations and allied matters of insurers regulations 2024 present a new era of enhanced policyholder protection, streamlined operations and increasing transparency in the insurance sector. So the introduction of an extended free look period, nomination requirements for comprehensive coverage and issuance of insurance policies through electronic mode. So these are helpful for the buyers. Thank you very much.